In response to the EU's carbon border tax, India might impose retributive tariffs on the EU's exports. The EU wants to impose an extra tax on products brought in the EU as imports, such as iron, steel, and cement, to encourage cleaner industrial production in non-EU countries. This levy is called the Carbon Border Adjustment Mechanism. Iron and steel will be part of the list now, but it can be expanded to include polymers in the long run. This proposed tax would be implemented in two phases, with the first beginning on October 1, 2023, after which importing countries in the EU would have to declare emission details on incoming products. In this, the first phase, companies need to pay no monetary levies. Well, the union claims that this tax will help address the problem of carbon leakage and make its trading partners participate in the fight against climate change. Now, what is carbon leakage? The leakage takes place when a business moves its plant or factory from a nation with strict environmental regulations to one with lesser regulations because it is cheaper to do so. In doing so, it allows carbon emissions to continue unabated in another country, while the outsourcing company need pay no penalties for not going green. The EU says that the CBAM is in line with the region's target to cut emissions by at least 55% by 2030 compared to 1990. One of the leading negotiators of the deal, Mohammed Chahim, said that this tax would help decarbonize the manufacturing industry. If the plan is passed into law, importers will be required to buy carbon certificates that are equivalent to the price that would be charged for the carbon if the goods have been manufactured in the EU. India is concerned about the tax because it will make the country's steel exports more expensive. Another concern for India is that the tax will increase the price of goods in Europe, which will lead to a decrease in demand. And as the Asian nation goes about signing free trade agreements or FTAs, its concern is if the partnering country brings in the CBAM or its equivalent after the pact is signed, then India would have to pay tariffs on such goods that it exports but would have no opportunity to levy retaliatory charges.